If you do business in India, you know the drill. You're dealing with the Goods and Services Tax, or GST. Now, it was supposed to simplify this huge, messy web of old taxes, but let's be real, the legal side of it can feel, well, incredibly complicated. So today, we're going to slice through all that complexity. We're going to map out exactly what you need to know. And path breaking is no exaggeration. This one single reform just wiped the slate clean, getting rid of a whole bunch of confusing state and central taxes and swapping them out for one unified system. The idea behind it was simple, but wow, so powerful. One nation, one market, one tax. So, to make sense of all this, we're going to follow the journey of a business, just like yours might be. We'll kick things off with the absolute basics. The language of GST. Then we'll get into that critical first step, registration. After that, we are diving deep into the system's core engine, the input tax credit. Before we look at the compliance side of things, records, audits, and what happens when you land in a dispute? All right, let's start at square one, the fundamentals. To really get around in the world of GST, you've got to speak its language first. So, what do these key terms actually mean in plain English? First up, goods. Okay, the official definition here is incredibly broad, but here's a simple way to think about it. If it's a physical thing that you can move, it's pretty much always considered goods. This even covers some things you might not expect, like, growing crops or even certain kinds of legal claims. So then what are services? Well, the law pretty much says it's everything else. Anything that isn't a good or money or a security. It's this massive catch-all bucket. So if you're a consultant, a programmer, or even a bank that charges a fee to swap currency, you are providing a service. Simple as that. And here we go. This is the big one, aggregate turnover. This is the number that really drives most of your GST duties. And listen, it's not just your main sales. It is the total value of everything your business does. Taxable stuff, exempt stuff, exports, you name it. All across India, all tied to your single PAN number. It's the complete 360-degree view of your business. Okay, now that we've got the lingo down, let's get practical. Let's talk about the real starting point for any business. How do you know when it's time, when you've officially stepped into the world of GST? This right here is the first critical question every single business owner has to face. Now, a lot of people think it's all about hitting a certain sales number, a turnover threshold, but actually, the law is way more specific. There are times when registration isn't optional at all, no matter how small your business is. And this is so important to get right. The law has these specific triggers that make registration mandatory. For example, the moment you sell goods from one state to another, boom, you're in. You have to register. If you act as an agent for somebody else, you're in. These rules are there to make sure certain transactions are tracked right from the get-go. Turnover be damned. And now we get to the real heart of the GST system, the thing that makes it all tick, the input tax credit, or ITC. I promise you, if you get this one concept, you'll understand why this whole reform was such a massive deal. Just look at the difference here. It says it all. Before GST, you had this tax on tax nightmare. A manufacturer paid tax, then a wholesaler paid tax on a price that already included that first tax, and it just kept piling up. It was a mess. But with ITC, that chain is finally broken. Every business along the way gets to claim a credit for the tax they paid at the stage before them. The end result? Tax is only paid on the value added at each step. It's the engine that makes the whole system fair and efficient. But hold on, it's not a complete free-for-all. You can't just claim credit on any and every business expense. The law is very clear about blocking ITC for certain things, like personal spending, client lunches, your gym membership, or company cars, unless, of course, that car is the core of what your business actually does. It's a list every business owner really needs to know by heart. Okay, so being part of the GST system means you've got some responsibilities. This part is all about what you need to do to stay on the right side of the law, and what the tax authorities can do to make sure that you are. First things first, your records. The law doesn't mess around here. You have to keep a true and correct account of absolutely everything, along with all the paperwork to back it up. And we're not talking short term. You are required to hang on to these records for a full 72 months. That is 6 years after you file your annual return. So what if the authorities have some questions? Well, their powers start with inspection. A proper officer can be authorized to just walk into any place of business to inspect your operations and check your records.
Now, if an officer has what the law calls reasons to believe that goods need to be confiscated or that some important documents are being hidden, their powers get a lot bigger. That same Section 67 gives them the authority to search the place and seize goods, books, or any documents they think are part of an investigation. And this is where the law gets very, very serious. For the big offenses, like creating fake invoices or collecting tax from customers but never paying it to the government, Section 69 gives the commissioner the power to authorize an arrest. This is saved for the absolute worst-case scenarios, and it really shows you how high the stakes can be.
So let's talk about the consequences. If you don't comply, what kinds of penalties are we actually looking at? And what's the game plan for fighting a decision you think is wrong? The financial penalties can be all over the map, depending on what happened. For instance, just failing to file a certain return could cost you up to 5,000 rupees. But if you're caught deliberately giving false information, that starts at a 10,000 rupee fine and can climb all the way to 25,000 if you keep doing it. And that's just a small taste of the direct financial hits. And as we've said, it is not always just about money. Section 132 of the law makes it crystal clear that for the really serious offenses, we're talking major tax evasion or fraudulent claims, the penalties can go all the way up to imprisonment for up to 5 years on top of a fine. But what if you truly believe the tax officer got it wrong? It's not the end of the road. The system has a very clear, step-by-step appeals process. You can challenge an order by first going to the appellate authority, then up to the GST appellate tribunal, and if it's a matter of law, you can even go to the High Court and the Supreme Court. There is a path to fight your case.
Which kind of brings us full circle, back to our final thought. The whole idea behind GST was simplification. Remember, one nation, one tax. But as we've just walked through all the definitions, the rules, the powers of the authorities, the penalties, it really makes you wonder, has this path-breaking reform, with this whole detailed legal world built around it, truly made the tax system feel simpler for the everyday person trying to run a business? That's something to think about. Thanks for tuning in.